Hello and thank you for joining me today. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. I'm going to give you a quick update on the interest rates and how they're affecting the ConocoPhillips lump sum calculations for both legacy Conoco employees and legacy Phillips employees. Now we just got out this morning the interest rate update for September, the segment rates that the government releases, and that's going to give us the first quarter 2023 interest rates. We'll go through a comparison of that and show you how those have changed as well. Now before I get started, I just want to remind everybody that we're not employed by nor are we affiliated with ConocoPhillips. However, the Retirement Group has been working with corporate employees for about 30 years or so, and a lot of that time we spent working with ConocoPhillips employees and helping them transition into retirement. So whether you have questions on the pension plan like we're going to go through today, whether it be the 401k, healthcare, retiree medical benefits, life insurance, things like that, we can cover those questions for you as well. We do have offices throughout the country, so rest assured if you want to sit down with somebody face-to-face, we can still accommodate that. And then obviously we can do web meetings, email, phone call, all of that good stuff as well. Now, there is one of the best things you can take us up on if you haven't done so already, and even if it's been, if you've done one, it's been over a year, is an update to a cash flow analysis. This is our financial plan we can run for you to help you determine the best day to retire so you maximize your ConocoPhillips benefits. And definitely going through situations like this where you compare the lump sum versus the annuity, whether I retire now or whether I work another 2 or 3 or 5 years, and what things look like not now, but just, not just now, but also in the next 20 to 30 years as well. So you can see how that long-term situation can play out. But let's jump into what everybody's concerned about, and that's the rising interest rates we've seen so far in 2022. And unfortunately, it looks like they are continuing. So if we take a look at this seesaw here on the top, just a quick refresher on how these interest rates are going to work. And I do want to remind everybody that this is only going to affect you if you're in the Phillips plan or the Conoco plan. These are the classic defined benefit plans, in which case there's a pension calculation that looks at your years of service, final average pay, and a multiplier to determine how much of a single life annuity you're going to get for the rest of your life. Then what happens is they go and look at the current interest rates to determine what your lump sum amount is going to be, and that's what's affecting those lump sum conversions right now. So that seesaw we see at the top there, as interest rates go up, we're actually going to see your lump sum come down, and then as interest rates go down, we see your lump sum come up, and that's what we've been helping employees with, for, like I said, the last 10 plus years. But the last couple years during the pandemic, we actually worked with a lot of ConocoPhillips employees and told them to hold off on commencing their benefits because we were in the opposite situation. The government was dropping those interest rates, and so the interest rates were coming down, driving up some of those lump sums. So we knew this was going to end, and we knew it was going to turn the corner, and we're going to see rising interest rates bring those lump sums back down. Now, did we expect it to come this quick and this high? No. So we've seen a lot of hammering of the interest rates so far this year, which has driven down those lump sum calculations. And we were hoping some of this was behind us because we saw the segment rates, we kind of hit their high in June. They came back down a little bit in July and August, but now they've skyrocketed here in September. And we're seeing the largest jump from month to month we've ever seen in the history of the PPA segment rates. So what are those PPA segment rates and how do they affect you? So what's going to happen is post-merger, ConocoPhillips uses those segment rates to calculate your lump sum. And they look at the first, second, and third segment. The first segment correlates to the first 5 years of retirement. Second segment is going to be for years 6 through 20. And the third segment, years 21 beyond. So for most of us, that second segment is going to have one of the highest weightings because it covers 15 years of retirement. Another unique thing about ConocoPhillips is it gets more complicated. They also use the GAT rate, which is the 30-year Treasury average for 2001 through 2009. And they also use the PBGC rates for prior to 2000. So this doesn't have everything here, but the consensus across the board is interest rates are still rising, which is driving down those lump sums. If we go back to that seesaw effect I've mentioned before, generally speaking, when we see a change about 1% in interest rates, it's going to equate to anywhere from an 8 to a 12% change in your lump sum depending upon your age. So keep in the back of your mind kind of a simple math that 1% equals about a 10%. So let's dig into some of these numbers here. Now, the reason September is important for us is because ConocoPhillips does it fairly simply. They just use the fourth prior month to give you that quarter. So September interest rates are what we're going to use for the first quarter of 2023. And if you see this across the board at the top, it's 4.48% for the first segment, 5.26 for the second, and 5.07 for the third. And that 30-year Treasury is at 3.56, which is the monthly average. Now, the June rates, which were kind of, like I said, they capped out, they came down a little bit, but now they've jumped back up. Those are what we're using for the fourth quarter, or what ConocoPhillips uses for the fourth quarter. And you see those were lower at 3.64, 4.8, and 4.78. Now, if you look at that trend going down, you can't do anything about the previous quarters, but you can see how that trend was lower, and it's been rising ever since. And if we look at that bottom line there, and we look at the change that you're going to see from the fourth quarter this year, 2022, to the first quarter of 2023, we're looking at a 0.84% change in the first segment, a 0.46 in the second segment, and then a 0.28 in the third segment. So let's just say roughly about a half a point change or so, maybe closer to an average of about 0.6. So what that's going to mean is you're going to see probably about a 5% drop or so in your lump sum from fourth quarter to first quarter 2023. So again, if you ran your numbers and you've had $1 million lump sum right now, that could go down by $50,000 simply staying into first quarter. If it was $500,000, it could go down by about 25. And if you've been on top of this and you've been attending some of our webinars, you've probably seen it come down from where it was this time last year as well. But again, that's behind us, so there's nothing we can do about that. But it looks like that trend is still continuing, where we're seeing some drops in lump sum. So if you have questions on this, it's really important to give us a call to run your numbers and run that cash flow analysis that we talked about, because we can run that and show you what the annuity looks like versus the lump sum, what it looks like to retire now versus 2 or 3 years down the road, or 5, whatever your desires may be, and show you how that looks not right now, but also how it's going to look 10, 20, 30 years down the road, so you can see how inflation and everything else kind of plays into an aspect here. Another important thing to be aware of is, even if you're thinking about taking the annuity, interest rates have gone up so much that a lot of times taking a lump sum and doing your own SPIA, which is a single premium income annuity, could actually get you a better rate than what the annuity is going to give you through ConocoPhillips. So it's really important to just give us a call and run through all those different scenarios and look at your situation side by side, especially if you're within 5 years of retirement. So in order to reach us and go through those questions, simply give us a call at 1-800-900-5867. You could also reach us at info@theretirementgroup.com. If you'd like to schedule an appointment with myself or one of the other advisors across America, just go ahead and hold your phone up, use one of these QR codes. One is for meetings, and the other is going to be for our LinkedIn page specific to ConocoPhillips. So if you want to stay updated on these quarterly interest rate changes or any company plan changes that we release, you can get that information there as well. I do want to remind everybody, like I said before at the beginning, we've been working with ConocoPhillips employees for quite some time. We can definitely hold your hand through this process or answer any questions you have. Even if you're working with somebody right now, it's good to get a second opinion or at least confirm where you are. But ultimately, we are not employed by ConocoPhillips, nor do we work, nor are we endorsed by them. But should you have any questions and want to dig into any of this, like I said before, just simply call us at 1-800-900-5867. Thank you very much. We hope you have a great day.